Hello, everyone, and welcome to a Friday night cryptocurrency interview. This is the first time we're doing this. This is largely for time zone reasons. Of course, a lot of these interviews that I've been doing have to kind of figure out how to make sure that I can connect with the people from different places all around the world. So this was the time that worked. Good to see folks showing up. Today, I am joined by Matt Ranger, who I am using the non-French pronunciation. I'm going to kick it over to Matt for a second. Could we get the true pronunciation of your correct name?
If you want to be perfectly snobbish, it's Mathieu Ranger. But
Mathieu Ranger.
I'm from French Canada, which is not the snobby French people. It's the working class asshole French people. So we're fine with butchering French over here. So
my French teacher will be very sad that I probably can't say that quite correctly, but I gave it a shot there, and hopefully it's close enough for her. I wasn't a fan of her class anyway, but that's beside the point. Anyway, just to set things up a little bit here, you actually, because I had put out sort of messages like, hey, folks out there who are talking about cryptocurrency, I would like to talk to you. Please contact me. And you contacted me, and you are actually from the skeptic side of cryptocurrency, which we've had one person on, but the majority of the people have been. Can you give people a little bit about your background, why you decided you wanted to come talk to us today, and like sort of what your background is and why you're into this discussion?
Yeah. Just so quick bypass. The reason I contacted you is like, I'm kind of vaguely aware of your stuff. And then when I was skimming YouTube, I saw that you're interviewing crypto people. And one thing that's true, not just in crypto, but like in markets in general, is that the skeptic side is always underrepresented because there's not much incentive to broadcast that you're a skeptic, because normally you're a non-participant in that case. So I figured, this is the same thing why like mod places like Are Bad Economics and, I blog the way I do. If you're not making like this conscious effort, if you're a minority voice, then no one's ever going to hear it. About my background, so I started out my professional career being an online poker pro. I did that for half a decade. And then I switched over to being a data scientist in the mid 2010s. And I've been working as a data scientist since, mostly in ad tech. So like my current job right now, I manage a bunch of machine learning to spend money for, ads, as one does in my industry.
Gotcha.
Yeah.
And okay, sorry, I wasn't sure if you were done yet. Keep going.
No, well, on the side, like I've been, most of my background has been in economics, and I ended up as a data scientist just because I can code since my poker days. Like poker, if you're not aware, like chess, since like 2013, 2014-ish, all the serious pros have been using, engines to like guide their play.
Mm-hmm.
And like I was one of the early adopters of that sort of tech. So like if you can do like statistics and you can code, people call you a data scientist. But I always saw myself as more like of an economist that does data science rather than the opposite.
And so can you give folks a little bit of an idea about why you're interested in talking about crypto at all? You are a moderator on Are Bad Economics. So even just
Yeah.
let's forget crypto for a second. Even you're interested in talking about misconceptions people have or errors that are made when discussing economic systems, just in general, it sounds like. So
Yeah.
so how did you get involved in that, and how did that lead to crypto? I guess what's the give us the through
So
line.
when I was in poker, I studied a bunch of game theory to like guide my play. And I was looking for like places online to talk about these concepts, and I kind of funneled myself to Our Bad Economics, which in like 2014 was the only good online forum to talk about economics, and probably still is actually to some extent, because most economics forum, even like Our Economics, is full of like people trying to push their politics onto economics, whereas Bad Economics, by like structure, it's like, hey, we point out people being stupid about it, kind of force the discussion to be rational and about the actual content rather than the politics of the content. And I knew that I wanted to get out of poker, even back then. And I wanted, to find a route out. So my route out was, doing a master's in economics and like participating in like online economics discussion for a long time, and like, more like academic ones and ones that are about like research and numbers rather than just like, oh, capitalism, this, neoliberalism, that, stuff with actual content, kind of pushed me into, loving this stuff. So, and now I just try to, push people to, be more curious about this rather than just like having preconceived notions and pushing it into what they want.
And is that sort of how the cryptocurrency angle comes in? Because you sort of see people doing the same sorts of things with cryptocurrency, which is to say that they have a specific model or a specific idea or
Oh yeah.
ideal or philosophy, and they're basically just like projecting that onto crypto, but they are unable to substantiate it with actual economic theory. I mean, I'm putting your words in your mouth, but is that? I'm
Yes.
just going on what you said there to
Yeah.
make an assumption there about what your
To give
interest is.
you to give you a bit like my journey with crypto. So I knew about it back in like 2011 when I was in online poker. Because online poker, there's always like seedy places,
Mm-hmm.
and
Mm-hmm.
Bitcoin was a good way to like shuffle money around on the internet from site to site without, oversight.
Mm-hmm.
And then there are also like online Bitcoin sites and stuff like that. And I always kind of kept an eye on it because one danger of like, messing around in, well, even today, but like in 2011 and 2012 even more because like hacking risks were higher. Like there's price volatility, so you have to understand what's actually going on because your money's at risk just by holding bitcoins instead of dollars.
Right.
And then when I kicked out of poker, I kind of stopped caring about crypto altogether.
Mm-hmm.
And then in 2020, a friend of mine poked me in like August and was like, hey, stuff's crazy. MicroStrategy bought $500 million worth of Bitcoin. And like, people are saying that Bitcoin is the only way to protect against inflation. And I was like, oh no.
Okay.
The stupidity's back.
Okay.
But like even going back to like Satoshi, like, on a technical computer science level, what he did was really cool, like tracing back to like the cypherpunk stuff and like remailers and like how that became Bitcoin. But like the economics of it was always nonsense.
Okay. Well, let's stop right there then. So
Yeah.
we have not talked. So in this series so far, I have some folks potentially coming up who may be talking more about the economics angle, but honestly, I don't feel like anyone who's been on the program so far has really been someone with a strong background in economics. So could you perhaps be the first person in this series to offer that background? Like, obviously there are people will disagree. Economics is personally, economics to me is not exactly a perfect science. So I do think you can have competing views of it. It's not as good as I would like it to be from a theoretical standpoint. For whatever reason, we can, that's a rat hole that's not worth going down. But could you lay out your thinking about the economics of cryptocurrency as sort of a way of us starting to talk about it? Because I don't think anyone's really done that in this series so far. Nobody's really tried to say, what are the economic effects of this thing at the limit? What does it actually look like from a economics theory standpoint? And does that coincide with any of the things that are being said about it, or does it not, right?
Okay, so there's a lot to like unravel and it's hard to find a starting point.
Okay, that's fine.
But so like a lot of like there's two ways to think about like economics. One of them is like look at data and guide it into your theory, and the other one is come up with a theory and try to look at data to see if you're wrong or not, right?
Okay.
And a lot of the people who are wrong or like very political about economics come from the theory side, right?
Uh-huh.
Specifically to Bitcoin, like the ideology, like the history of economic thought that it traces back to is called Austrian economics.
Mm-hmm.
It traces back to a guy called Ludwig von Mises in like the 50s.
Mm-hmm.
And basically, like in the 50s, economics was like seriously undeveloped. Like we started really using math and, statistics and economics around a guy called Paul Samuelson and Ken Arrow in like the late 50s, early 60s.
Mm-hmm.
But before that, it was kind of like, people could just like talk about it and like, in the Keynes day, for instance, in the 30s and 40s, you'd be like, I think this is happening and like we can know better. So like you'd do that. And so in that context, Ludwig von Mises came up with a theory of economics, which we called Austrian economics. It's used from Austria.
Okay.
Which was like, well, you might as well not use math because it's useless. And actually, we should come up with all of economics from the ground up, just with like mathematical axioms. The first one of which is human acts for reasons.
Okay.
That turned out to be nonsense because, like, first of all, that axiom is like undefined,
right?
So you can't do anything from there. And then, second of all, if like your whole setup is we're not going to use math, then you can't ever use like empiricism to prove yourself wrong.
Right.
So you're obviously going to end up in like some echo chamber.
Okay.
And so by like the 60s or 70s, that was like basically rejected by everyone serious, except like a small clique of like hardcore libertarians who were heavily into gold.
Okay.
People like Murray Rothbard and stuff like that. And this is kind of like the underpinnings that Satoshi was into, right? He was looking for like, a quote unquote sound money is what they call it, like money that's backed by like a hard asset,
Yep.
which is a bad idea, and we can go into why later on. um, and like Bitcoin was like, okay, so governments, I don't trust them, and fiat money, we can just print it however many we want, so let's not trust that. So we need something like gold, but also the internet's awesome, so let's make Bitcoin, right? That's kind of
Right.
like
Yeah.
the underpinnings of Bitcoin. And even to this day, like a lot of the thought behind it is kind of like libertarian in root, which is not necessarily bad, but if also you're detached from like reality, leads you to weird places. And that this leads to all of these like moronic discussions about like inflation and how Bitcoin is specifically good against inflation, which makes no sense on face.
So let
um
me,
yeah,
as you probably know if you have skimmed these videos, I ask a lot of questions
yeah,
because I always like to get down to the specifics. So I would like to talk about the inflation part of things, but already in
yeah,
just what you said, I have a couple things I'd like to clarify there.
cool.
For myself. Now, obviously, I know a little bit about what you already said, so I'm gonna skip over those because uh, I'd like to concentrate on the things that I think aren't easy to find. Right? If someone wants to know more
Sure.
about Austrian economics or Keynesian economics, they can go look that up on Wikipedia. It's not that hard. But
Yep.
some of the things that are less easy to look up are things like you drew a very straight line, right, from Austrian economics to Bitcoin. And I just
Yeah.
want to make sure that I have the reasoning for that. Is that reasoning strictly because it is designed to create a fixed rate of currency creation that then ends, which looks like gold mining? Or was it more because you saw, like, does Satoshi Nakamoto, quote unquote, have postings where he talks about Austrian economics? I just want, can you be more clear about why you immediately linked those two things? Because I just like to
Yeah.
get that out on the table before we go further about the implications of it.
So I'd have to dig back into like the original postings and like the white paper, but there are like a couple of allusions that you cannot make without having read, frankly, too much Austrian economics.
Okay.
But like I can't come up with like specific, oh, there it is, without actually taking 10 minutes to go back and like look.
But
But
that is a
apart
thing.
from
In other words, you do believe there to
yeah,
be
yeah, yeah,
specific.
yeah,
Okay,
yeah,
right,
yeah,
got
yeah,
it.
yeah. He specifically read people like Rothbard and stuff like
Okay,
that, clearly.
okay,
But apart from that, like the original idea behind Bitcoin, if you're looking at it, is like, okay, let's come up with a currency that is detached from governments because we don't trust governments, which makes sense in a like political sense. On an economic sense, those sort of currencies are always doomed to failure. Um, for reasons that we can go into later on, but
mm-hmm,
like it's the same reason the Great Depression was so much worse than the Great Recession.
mm-hmm, mm-hmm,
Like if you have a fixed supply, the price of your currency is based only on demand.
mm-hmm,
And that means that in recessions, deflationary spirals are a thing,
mm-hmm,
which
mm-hmm.
worsen things. And that's
Yep.
why like the Great Depression was so bad
Mm-hmm.
compared to the Great Recession, because if you can just print money at will in a recession, then you're kind of playing with the supply as well as the demand. So you can equalize price, and you avoid this feedback loop into I'm afraid of like all these assets in the economy, so I'm running to cash, which means that the comparative price of cash compared to those assets goes up,
Mm-hmm.
which means that I'm incentivized to hold cash
Mm-hmm.
rather than
Right.
invest it, spend it,
Yes.
which means that it goes up even more, et cetera, et cetera, et cetera,
Yes.
which means that there's a slowdown
Yes.
instead of a stimulus. So those deflationary spirals are like really dangerous,
Yes.
and the only way to actually counteract them is supply management. And if you're saying like, oh, I don't trust people like Jay Powell and the Fed, then sure. But like even like a 10-line algorithm could, do better than a fixed amount of money.
Yes.
So
Yes. I would also point out. I mean, from a economics standpoint, I've always felt like the underlying idea that people behave quote unquote rationally is also not particularly useful because most people can
yeah,
see obvious examples of that. And so one of the things that's true, at least, again, not to put words in your mouth, but I would assume you would agree with, is that the act of printing money also allows you to play with the psychological effects of pricing on people, which is actually fairly important. Like, in other words,
Yeah.
there's a lag between the actual prices of things in a system, and this is actually used to get yourself out of a jam. Now, I assume Bitcoin people would say that that's bad, but it's unclear that anyone's ever proven that that's actually
Yeah.
bad.
No, like if you talk to like macroeconomics
Yes.
people who know their stuff, they're going to talk about the Fed setting expectations.
Yes.
And like they give you a straight example of that. Like if the head of the central bank, tomorrow came up and said, okay, on February 2022, we're hiking rates to 4%.
Yeah.
You would see a market effect right away.
Yes.
Right. So that psychological effect is obviously there.
Yes.
Right. Because this is not something that is there, and he could just be lying, or
Yes.
he could get fired between now and then.
Yep.
But the actual probability space changed.
Yes.
So you would see a market effect, right? The S&P 500 would have a price change right away.
Yes. So I guess now let's go into detail on some of the things you said, I guess, unless you'd like to expand first. I feel like there's enough there that I can actually start talking about specifics. So I think the first topic then we could talk about is can you explicitly say, we could talk about Bitcoin, but can you explicitly say that cryptocurrency in general is a hard asset, or is it just Bitcoin? Is it just Bitcoin and Ether? Is it just Bitcoin, Ether, and Chia? Or like when we start to draw these, when we start talking about, it sounds like we're going to start talking about hard assets and why they might be bad. What constitutes a hard asset in crypto today, would you say? All of it, some of it, none of it?
I mean, you need to like step back a bit, right? Because like you're talking about an asset here, but I mean, at first we were calling it like a currency, right? And so it's better to start thinking about it as a currency rather than a financial asset, because as a financial asset, it's pretty boring, right? There's no cash flows to it. So as a financial asset, the only it's purely a psychological game of like how much people do you think are interested in it.
Yep.
Right.
Yep.
That's it. Right. Because it's actually a negative sum thing. You need to pay miners out. Yep. And then whatever anyone pays for it comes from someone else, right? That's not buying Apple's stock where Apple is selling, crap to people and making profit on it.
Yep.
Or like this asset has a cash flow that you can think about and model. Like cryptocurrencies as financial assets are extremely boring.
Yep.
So think about them first as currencies and like, okay, go back to your monetary economics textbook. What's the three uses of currencies? I won't put you on the spot. So first one is medium of exchange. Second one is unit of account. And third one is store of value. And let's analyze, for instance, start with Bitcoin and why my official position is like maybe at some point in the future, some crypto that is not proof of work could possibly be useful. But right now, everything's crap.
Okay.
And Bitcoin specifically is like super duper crap.
Okay.
But like, okay, let's analyze specifically Bitcoin, and then we can talk about like other cryptos if you feel like it afterwards.
Okay.
Like as a medium of exchange, Bitcoin is okay-ish. The transaction fees are pretty high.
Yep.
But it's like a fairly liquid market, and there's not that much friction to actually use it as a medium of exchange.
Okay.
So it's all right. I would say like you can't really use it as a medium of exchange for anything that is time bound because the price volatility is too high. But we'll talk about that in the store of value section in 2 minutes.
Okay.
As a unit of account, it's garbage because the price volatility is too high. So you're not going to account, this MacBook Pro is like 0.1 Bitcoin because by the time I'm done this sentence, it's actually 0.39 or 0.41.
Gotcha.
Right?
Gotcha. Yes.
So, like actually, like people talk about, talk about the actual price level, but what you're interested in more than the price level is the variance around the price most of the time, right? Because if you want like a good currency, you don't really care about the price so much as like how much is it going to be worth 6 months from now or like a year from now, because you want to use it to denominate loans, for instance. So Bitcoin is a terrible unit of account, and it's also a terrible store of value. Even though all the Bitcoin people are claiming that it is a store of value, they're like abusing the meaning of words here.
Okay.
Right? if I buy groceries and I store the groceries in my fridge, I want the same groceries, when I come to make food with them.
Hmm.
I don't want twice or half the groceries I have because I'm either gonna not be able to use them or go hungry, right?
Okay.
If I'm storing something,
Yeah.
I want the same thing, right? This is the meaning of to store. This is a word. Words have meanings, right? If you go to your textbook, store of value is related mathematically to the variance of price over time, right? The
Yes.
price volatility. It's not related to like Bitcoin. People say, oh, if you held onto Bitcoin in 2012 from now, you would have made a bunch of money. So it's a great store of value. No, it's a terrible store of value. It's a great speculative financial asset. It's not a store of value, right?
Well, but why would somebody? I mean, just to clarify that point, why would somebody who was trying to store groceries care if they ended up with more groceries? Surely you only care if you end up with less groceries, no?
Correct. But yes, but variance goes both ways, right? You can't only have variance one way, right?
Well, I mean, or you could argue that it doesn't. I mean, so just to be clear, the argument is that the variance can be negative. It's not just that
it has
variance
to
is
be.
bad, right?
Yeah, because it's basically a call option if it's only positive or zero, right?
Yeah,
But the variance has to be negative if it's the spot price,
yeah.
possibly. Um, so yeah, and I mean, like it's the same thing, right? If you bought in 2021, you're anywhere between like plus 50% to minus 50%, depending on where.
Right.
Right now,
Yes.
the price is pretty high, like at this very moment. But like if you look, 2 months ago,
Yes.
it was like 50 or 60% lower.
Yes.
Who remembers?
Yeah.
So it's not a good store of value because the volatility around the price is really high. And that's a problem for a bunch of things because people think that like a medium of exchange is instantaneous, like, oh, you're selling me this, laptop and I give you this money and we're done. But actually, like, there's time delays to basically all meaningful transactions in life, right? For the same reason that like there's chargebacks, you give me this laptop and then you're gone and then I open it and oh, actually it's a brick, right?
Yeah.
Or if we want to make something a bit more complex where there's like a loan involved or maybe there's like an escrow or something like that, and you don't want price volatility, right? I don't want the price to be different between the time at which we negotiate the deal and then the time at which we have a problem with the deal. Where if
Well,
I write you a loan,
okay.
I don't want to. Yeah, sorry.
I would like to clarify one aspect of that, though. So, if I may,
Yeah.
I think you have to be very precise again about what you care about here, though. So, because, for example, using the same analogy, one could argue that the dollar is a very bad store of value because I can tell you for certain that if you held on to $1 or $10 or $100 from 1970, you would not be able to buy the same amount of groceries you could buy then with that. So can you be
But
more specific about the store of value
but
aspect?
the bands of which you have that certainty are very, very small since we've moved from the Bretton Woods, well, in the US, since you've moved from the Bretton Woods into like pure fiat, right?
Mm-hmm.
Like if you look, can I share my screen on my blog? Because that's going to help visually, I guess, a lot of people.
Anything
Or
that Zoom can
more
show
audio.
us will come across.
Okay, give me a second. Because there's this chart over time. But like the thing is, like, the dollar loses whatever, anywhere between like 1% and 5% a year in value, right? That's a very small and predictable band, right? So if I give you $1,000 today and I tell you, in 2 years, I want you to give me back that money, then I know that what you're going to give me back is like 990, right?
Mm-hmm.
At worst.
Mm-hmm.
So it's a great store of value in the sense that you know pretty much exactly how much you're going to have, even though it is predictably less.
Mm-hmm.
Emphasis is on the word predictably, not on the word less.
Mm-hmm.
You see what I mean there?
Well, I mean, no, I don't really, because, so, again, just to press the point,
Yeah.
like, again, it's easy to find examples of currencies that go south very quickly, and, the dollar could easily be something that does do that. I mean, the hypothesis is that it won't, but, I mean, the government spent $2 trillion extra dollars last year. They want to spend $2 trillion extra dollars this year. We don't actually know that the volatility of the dollar might go up and the volatility of Bitcoin might go down. I'm not sure, especially because Bitcoin is still new. I don't necessarily disagree with you, but I'm not seeing how we can actually draw that much much of a distinction between these two things at the end of the day?
It's actually very easy. There's a
Okay.
like this famous paper from 1984 by Tom Sargent, who won the Nobel Prize in economics. He was looking at hyperinflation episodes from 1900 to like 1940 or so,
Mm-hmm.
right? Like Weimar Republic,
Mm-hmm.
Hungary,
Mm-hmm.
et cetera, et cetera,
Mm-hmm.
right? And the one thing that you always see happening before a hyperinflation episode is that the central bank loses political independence from the government administration.
Mm-hmm.
What that means in very concrete terms is that Jay Powell loses the power to say no
Mm-hmm.
to Joe Biden.
Right. Yes.
So if Joe Biden goes and says, hey, print me a trillion, buddy, and Joe Powell cannot reasonably say, fuck off,
Mm-hmm.
then you're in big trouble and you should probably start running away from your dollar. But as long as you know that he reasonably has that power to tell the president to fuck off,
Mm-hmm.
and that the central bank is actually independent from the political administration,
Mm-hmm.
you're safe. And so this is a very important distinction to make, and like something that a lot of people miss. Like first, like in Venezuela, basically it took like a couple of months when Maduro replaced the central bank head to like the ludicrous hyperinflation.
Yeah.
He put like some freaking stooge in there,
Yeah.
and it took like all of 9 weeks before their inflation rate was like 900% to like 9,000,000%. Because as soon as you put like a person that can't say no to you, or that you erode that independence between the people who can print money and the people who spend that money, when that's eroded, then you're fucked. But as long as there's a great firewall between the two, you're safe. So it's pretty easy actually to predict in that sense.
Well, it's easy to predict, perhaps, but like you just said, you get 9 weeks. That's not a very long time now,
Yeah.
is it?
Yeah, but presumably you don't hold all of your assets in a dollar, right? You shouldn't like have 90% of your net worth as dollars sitting in a bank account. Presumably they're in like stuff that isn't the dollar. So if inflation goes haywire, actually you get richer.
Well,
theory.
I just wanted to make sure we were clear, and I think we are
Yeah,
now,
yeah.
on exactly what a store of value is from the standpoint of comparing it to other currencies you might use. Sometimes it's easy to overstate the quality of other currencies, especially if you pick one that happens to be during a good run, which the dollar sort of is. Like it hasn't had any huge catastrophes in recent memory. So it's easy to say, well, maybe Bitcoin isn't as good as that. But on the other end of the spectrum, it's like, well, the dollar could go south. And also we could also say, well, is therefore Bitcoin better than Venezuela's currency and so on. So just wanted to make sure.
Yeah. And here's the second point. So we're talking about the dollar, and then like it is absolutely fine to talk about like, how your political system's holding up, because like inflation is an economic phenomenon, but hyperinflation is very much like a political phenomenon.
Sure.
Right.
Yes.
And it like the way I was describing it to a friend is like inflation, is very hard to model. It's like, you have this plane and then you change like the shape of the wings, and it's like, how is the plane going to fly in this case?
Mm-hmm.
And hyperinflation is like, you have this plane and you set up a thermonuclear bomb in it, and how is it going to fly now, right?
Yeah.
It's very easy to predict hyperinflation. You're just, printing money in the death spiral.
Yes.
And it's just a political problem. Normal inflation, like between, -2 and like plus 12% or so, is one, hard to predict, and two, an economic phenomenon. So that I view these as two very separate things.
Okay.
And then second to go back to Bitcoin, like even if we are talking about crazy hyperinflation, Bitcoin is in no sense better than anything else, because hyperinflation is specifically the dollar exploding, so everything else is fine in comparison. Right? So you can have literally any financial asset with a liquid market. Bitcoin is pretty liquid, so it's a good option. But any other asset that has a liquid market is also fine. So it's not a good quote unquote hedge for inflation, because everything is a hedge for inflation that's not the US dollar.
Well, to try to put on my cryptocurrency advocate shoes for a second, and guess what they would say. I'm not sure people who try to make claims about Bitcoin. There are probably some people who are just trying to sell it to you, and they would say, "Well,
A lot of them.
just trying to get you to buy this cryptocurrency, so I say it's a good hedge against inflation, and I walk away and whatever. Maybe you buy it, maybe you don't." But for
Yeah.
people, for like true believers, right? So for people who are really like, no, like I work on Bitcoin, I care about Bitcoin, like I want this future or whatever. I feel like to them, what they're talking about when they say that it's better than the dollar or something like that for this reason, it's because they're trying to argue that it won't have that firewall breakdown, right? So there's two different types of hyperinflation scenario that we're talking about. One of them is saying you could buy Bitcoin as something that you think someone else might pay you for in the future as a way of avoiding keeping your money in dollars. That's thing one. And that's sort of what you were talking about. But thing two is, what if in the magical libertarian future, everyone is just using Bitcoin? Will we then magically not have a hyperinflation death spiral? So do you see the difference between those two scenarios? I'm not trying to claim that the second one is true. I'm just saying, do you understand why people might think about those things differently?
Yeah, but the second one is like nonsense.
Yeah. So tell me why. Tell me why. Tell me why it's nonsense. That's good.
Everyone using Bitcoin makes no fucking sense because Bitcoin is based on proof of work, and it gets worse the more people use it. Like the actual like people talk a lot about the like computer science behind proof of work, but the economics behind it are pretty simple in the sense that it's a Nor arbitrage condition, right? Like you have this thing, right, and you can mine it using whatever. For now, let's not think about like CPU cycles or like ASICs or like storage space for Chia or something, right? You have this thing, and then you can spend money in an abstract way to generate that thing, right? And over time, that gap is going to close to zero, right? And so the higher the price of Bitcoin is, like on the liquid market, then the more money you're willing to spend to get it, right? And this is all money that's being extracted from the space over time, right? In the sense that like when the price of Bitcoin is $65,000, it costs something like $30 million a day to maintain the network. Whereas when the price is like, $8,000, it costs something like, I don't know, $2 million a day to maintain the network.
Okay.
Right. So the actual like negative sum of the ecosystem goes up as the use case goes up.
Okay.
In Bitcoin.
Okay.
So it gets worse the more people use it.
Okay. And the reason you say it gets worse the more people use it is because of the fact that the blocks being mined, the cost to mine those blocks when expressed in Bitcoin,
well, it's the same, but when expressed in dollars, it goes up.
Right. When because the reward you get for doing a block is in Bitcoin, and then it has to be translated into something that you can actually use in the real world or whatever, or to pay your electricity company or stuff like that. So I guess I would continue pushing forward and say, well, take that out of the equation. What if everyone's using Bitcoin? Does it still hold true or not?
Well, yeah, I mean, then it costs like billions of dollars a day. It's horrible. Like we're, burning the planet to maintain the stupid network. I mean, move to proof of stake or something, please, God. Like Bitcoin specifically is absolutely atrocious for that. Okay. Yeah. Like the more the price of Bitcoin goes up and the more like the actual liquid transactions on it go up, like the worse this problem gets. So like even though there's more people, we're all together just paying this like increasingly ludicrous tax to just pay off electricity companies or like, Bitmain to TSMC, like pumping out chips for absolutely no reason to just like resolve stupid hash questions. So yeah, I mean, yeah.
So let me ask another question along those lines, because there's a lot here to unpack, unfortunately, but yeah, I'm trying to keep track of it all. So the first thing that I wanted to do is, can you talk a little bit more about, you made a distinction early on about currencies versus hard assets. And one of the things that I definitely heard, I want to say it was from Amaury Seche, who I talked to previously, was one of the things that he thought was interesting about cryptocurrency was that it is both. Meaning, from his perspective, he was thinking it as, okay, we have a resource like gold, and we want to use a resource like gold because it's limited, and we're going to use it as our money. So we make it into coins. But then what we find is that this is really, and I'm just trying to paraphrase what he said, we
Yeah.
find that this is really cumbersome because we literally have to like take this hard metal and turn it into coins, and if the price varies or we don't have enough of it, we can't split it up because it's a freaking coin. We'd have to like melt it down and make two coins. Like, so now we need different denominations of coins. It's just because people have to carry all huge amounts of gold on ships, like blah 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 blah. So
Yeah.
they start to switch to things that are easier, like paper money or contracts or just numbers that we then write down in banking and all that, blah blah blah. Bitcoin is an example, if you believe cryptocurrency advocates, of combining the concept of a currency with the concept of a hard asset, meaning that it is like gold in that there is some aspect of it where we know that only a fixed amount of it can possibly exist total. In the case of something like Bitcoin, other cryptocurrencies don't necessarily have that property. But in case of Bitcoin, there's a fixed number that will ever be mined, right? And
Sure.
it is also designed to be a currency in that we have this idea of passing cryptographic signatures around about who owns which fractional parts of them.
Yeah.
Do you see that combination as offering any actual benefits, or do you just see that as meaningless, or do you see that as a negative? Like, can you talk
So
about that specifically?
yeah. So first of all, like when people say like this is that, right? Like I think philosophically, it's important to like always remind yourself that a thing is what it does,
Okay.
not what people say it does,
Okay.
right? So
Okay.
if we're
Yeah.
saying Bitcoin is a currency, that's just wrong because it's not a unit of account and it's not a store of value,
Okay.
right? It's a decent medium of exchange because it has a liquid market.
Okay.
It's definitely not a store of value or a unit of account.
Okay.
It is a financial asset. No one's going to dispute that.
Okay.
Second of all, like gold, people in the Bitcoin space, for the same reason that, like, tracing back to Austrian economics, who are huge fans of gold as money, is pretty special. First of all, people think that like gold is like Bitcoin in the sense that like, oh, no one uses it for anything, and we all think it has value because it's yellow and pretty. But like, first of all, like about half of all gold, to like 60% of all gold in the world is used for industrial uses.
Yeah.
Between jewelry, like
Yeah.
say what you will about jewelry, but it fulfills like a human need of feeling pretty.
Yeah.
And a bunch of like other industrial uses. So there is like an actual cash flow market demand to gold, right? Apart from like
Yes.
the other like 45% that is like financial speculation.
Yes.
Second of all, gold like historically is magically special. Like white Europeans were using gold as a way to denominate money, but when they came to America, the people in pre-Columbian America independently found gold to be a good, pseudo money.
Okay.
That's basically like, you go to, a different fucking galaxy and you find humans there and they think that, element number, what's gold, like 80 or something?
I don't okay, yeah.
This is good money.
Yeah.
For the reasons that like it's easy to assert that it's actually this thing because it's kind of soft and heavy, and also it's yellow, so it's easy to like see that it's this thing.
Yeah.
And also it's pretty because it's yellow and not a lot of things are yellow in nature.
Well, and it's durable is the other big thing about gold.
Yes. And then like historically, you had like the Bronze Age collapse in like the 1100 BC. You had like the fall of the Roman Empire, like Genghis Khan, and like a bunch of like the Dark Ages and et cetera, et cetera, et cetera. And gold has always held through all of these. So like presumably, even if we have World War III, gold like is still gonna work, right? The internet
Yeah.
but like gold will.
Yeah, yeah.
So I can see the attraction to gold if you're like a full-on like doomer. Like I'm gonna give you gold. Like gold makes sense.
Yep.
I don't think that our internet infrastructure is gonna hold up. But gold right now is not a currency either, right? Its price is pretty volatile. It is a decent medium of exchange, but it's not a unit of account or a store of value in any sense, right? It's kind of like a financial asset that is pretty volatile and speculative, but does have a liquid market. So like, gold is definitely not a currency at this point in terms of like what it does.
So in some sense, you would say, if I'm summarizing you correctly, that both gold and Bitcoin are not currencies by any any rigorous definition of the word today, and that if you had to pick one as a financial asset that hedges against inflation, it would be hard to argue that Bitcoin was a good choice compared to gold because you have a tremendously long history of gold retaining this value, whereas Bitcoin already has been proven to be very, very volatile even just now.
Yeah. And like gold was a good currency in, let's say, the 1700s when we didn't have good alternatives, right? But now it's not, because a thing is what it does, right? Gold it did good currency because in the 1700s you didn't have many things that were as price stable as gold, right? As now you kind of expect extreme price stability out of the dollar, right? 2% inflation is like extremely tight bands.
Yes, it
price.
is. Yes.
So yeah.
So let me first of all, let me just say, did you have anything else you wanted to add there? Because I'm
kind of rambling on anything.
Okay. So the next thing I wanted you to go into detail on that you mentioned before, but we didn't really quite cover it. We've talked around it a little bit, but we haven't gotten right to it, which is underpinning a bunch of the stuff that you set up originally about, say, economic systems and what you actually want out of a currency and so on. You specifically said that hard assets are not really what you want in your currency anyway, or something to that effect, right? And so could now we kind of get into that aspect of it? So from an economic standpoint, why don't we want some limited something that the government can't just generate? Why don't we want that as a hard asset? Because we kind of talked about the fact that, well, there is a danger to it, which is if your firewall breaks down between your political class and your banking class, you can end up in a hyperinflation spiral. That's one example where a printable currency or a generatable currency at will is bad. But now let's talk about the flip side. Why is something that you can't generate at will bad?
So something that you cannot generate at will?
Yeah, like something, because I guess what we're saying is there's two types of things, broadly speaking. There's currency.
Right, something where the supply is like variable and something where the supply is flat.
Right, because like fiat currency, quote unquote, is something that somebody has the authority to generate more of, more or less at will, depending on how you look at it. And then a hard asset currency like a Bitcoin or a gold, they can't. They could lie. They could try to falsify how much they have, but they certainly can't like literally make more of it because there are hard bounds on how much gold there is on Earth or whatever. So that's what I mean.
Yeah. So from like just macroeconomics like view, okay, so if you have a hard currency where it's backed by like a fixed asset, then the price is just demand, right? Because supply is fixed, right? And hopefully, like anyone listening to this has like at least Econ 101.
Okay.
Right?
Okay. Yep.
Price is supply and demand finding, the equilibrium point.
Right.
This is bad because demand moves, for all sorts of reasons, which means that the price moves, right? So you'd rather have the price of your currency to be as fixed as possible. If only, like, let's name two reasons. The first one is loans. Okay, loans are good, despite what people say, right?
Yep.
My wife started a dog training school last year. We had to take a business loan for it. It would not have been possible without a business loan, right?
Yep.
Buying a house is not possible without a loan.
Okay.
Loans are just good because you're moving expected future cash flows into the present to invest into something you can build, right? Loans are good. And if your price is volatile, then you can't denominate that loan into, because you need to, nowadays we're so coddled by having like the dollar as the denominator to everything in the world, right? But think about like writing a loan in the 1600s, right? You need to denominate the loan in something.
Yes.
Right? You're going to give me back a pound of gold for this loan.
Yep.
Right. And now it's like, okay, you're going to give me back $125,000 for this loan.
Yep.
And in 5 years.
Yep.
And the advantage of having the price be very stable is I know that this $125 now, $1,000 now is going to be, something like a bit worse, like let's say 135 in 5 years or something like that, right? So the risk premium is small because the risk is small. But if the price is super volatile, like this 125 is anywhere between 50 and 300 in 5 years, then the person who's writing the loan to you needs to price that risk into the interest rate of the loan.
Well,
right?
okay, but I guess I'm not quite sure. Can you be more specific? I mean, I could guess, but can you be more specific about why because you kind of made an implicit jump there, possibly using the Econ 101, but you made an implicit jump there from the fact that the demand. So I have a currency, and
Yeah.
I say that I'm going to fix the amount of the currency, the total amount of the currency, and not print any more of it. And what this means is that if people need to get more of this currency, then obviously there's a problem if the demand for the currency goes up, because I can't print any more to give you. So if the demand for the currency goes up, then
The price goes up.
the price of the and price is hard to explain here because it's the currency we're talking about, but its value relative to some other thing is going up, meaning previously
so the price of everything else is going to go down.
Right. So basically, like, if I previously had $1 and this demand for dollars goes up, if I was previously able to buy a box of cereal with the dollar, now I can buy 2 boxes of cereal with a dollar or something, because people really need this money, right? That it perfectly explains to me why you would expect, as if your country is growing, why you would expect the demand, why you would expect there to be deflation. But what it doesn't quite explain is why you would expect there to be volatility. So you jumped right to volatility. Why can't we just predict that it will constantly be worth more?
Well, because demand jumps around. I think like there's no way to say, hey, demand jumps around, except look at the last 300-ish years of data that we have. We have like good data until like the 1900s or like 1890s, and then historians gathered as much data about like actual prices as they could back to like I think like the 1700s. If you look at the one book there that was like tracing like price volatility over time. And it's just kind of a fact that demand moves around for all sorts of reasons, right? There's like economic booms, economic crashes, manias, wars, political instability. There's all sorts of things. People invent a new thing, and that demand just moves. I don't think like I can give you any theoretical reason that is any more convincing than just saying, we looked at it, and I don't think demand is ever going to be a stable thing.
Gotcha.
Ever.
And so if I had to fill in the gap there, so the idea then is that the reason that if we assume that the demand itself has volatility, so meaning the input signal, which is our demand here, is very volatile, then the only answer, if we want to smooth out this other side, which is the currency side, which we know is going to be directly coupled if we fixed it, the only way to smooth it out is to have somebody, right, I'm assuming,
or something.
Like,
I'm not opposed to having an algorithm be the central bank, by the way.
Right, okay, so somebody or some algorithm that will basically increase the supply of the currency proportional to the demand and decrease it proportional to lack of demand? Or can you be more specific about this?
Yeah. They should, presumably, they should, burn money. In the reverse case. You don't see that often because like we aim for small predictable inflation because you want people to like not hold money and hoard it. You want them to spend it and invest it. So like on the average side, you're gonna always be printing more, but like yes, you should be burning money from time to time in like extreme cases. And price stability, like we talk about demand and supply, but like the actual thing we care about is price being stable.
Right.
Because if the price is stable, we can write more loans, and loans are cool.
Yes.
Like, among other things, right? You can stabilize price in a market crash, or they don't seem to do that, but like in market manias also. But yeah, also you don't need to price in insane risk premiums, right? We wouldn't take a business loan at 14% because there's a 10% currency risk in the there's a 10% volatility to the currency, and then a 4% loan margin, right, to the bank. Like 14% is atrocious. But the bank is forced to basically write itself a call option on your loan because the volatility is there. So it has to price that into the loan.
If a cryptocurrency had that sort of algorithm that you're talking about, so suppose that a cryptocurrency says, all right, our governing algorithm for the total supply of the underlying cryptocurrency is going to literally be the best volatility compensation algorithm that we currently know at the time.
Well, these are, stable coins. There's a couple of sorts. There's a,
Well, a stable
there
coin is
are
kind of a free rider. That's just saying we pegged to something else, isn't it? It's not really.
yeah, it's pegged to the dollar.
Yeah.
Yes, actually, yeah, it would be cooler if it was pegged to nothing and there were just actually like there was some optimization function that was minimizing volatility over time. But
Yeah.
then I guess you could never predict future volatility because it generally comes from events that you're not foreseeing in any case.
Yeah.
So I think like you actually need to be tethered to the real economy in some way or another, either through like what DeFi people would call a data oracle, or something like the Billion Prices project, where like you get an API to like all the prices on Amazon, Alibaba, and then you do like a weighted average and you try to like minimize the difference, which would be cool. By the way,
Yeah.
I'm gonna post to that project.
Yeah.
That would be nice.
Okay.
But like stable coins, yeah, you get like the algorithmic stable coins. Some of them are backed by crypto, and they try to like maintain like an amount of crypto on one side that has like the amount of the stable coin on the other side that's like kind of equal to $1. That always seems to go wrong.
Yeah.
And then you have the stable coins where the model is you give me $1 and then I give you a stable coin, and those always seem to turn out to be scams. USDC is much less of a scam than Tether. Tether is like obviously a fraud. We just don't know how much of a fraud it is.
Right, okay.
I don't trust crypto people to like with the business model of I give you $1 and you're gonna like be the custodian of that dollar.
Right.
And give me this crypto token.
Okay.
Back. So yeah.
Okay. So essentially, though, you do agree that there's nothing theoretically wrong with being able to do that compensation in crypto if we wanted to. So that's more of a complaint about something specific like Bitcoin, which doesn't do that. Am I right?
Or doing that with a proof of work coin, which would be garbage.
Right.
Or stuff like that.
Yeah, right, because you can't, because the proof of work is what limits the supply, not your decision how much more.
Yeah, and proof of work gets worse the more people buy into it. So yeah.
So are there other reasons why this is a bad currency beyond just that one? So we talked about the fact that something like Bitcoin's approach seems kind of bad by design because it doesn't share the property of being able to be managed to have price stability. But what about if we fixed that problem? Are there more bad things than just that one, or not?
I mean, like, I don't think there's any problems with like API money, right, in general, or like programmable money or whatnot. But you would need, so you would need it. I mean, you're asking me to design something, and to be honest with you, I haven't thought about this right now, so I'm kind of blue sky thinking with you here.
Okay.
But yeah, the main problem you're going to run into first is that if you want price stability, you need a mock-up of the CPI, or like this PCE, right? A measure of like the weighted average price in the economy that's like weighed by how much that price matters, right? Obviously, like the price of, some cat toy, if it's like $9,000, doesn't matter as much because no one buys it, than like, I don't know, Honda Civic being $9,000 versus $9,200, right?
Mm-hmm.
So you need prices and an API to collect all of those prices if you want to do it in a purely computer manner. And then you also need to maintain weights, which is a really hard job. Like if you look at the Bureau of Labor Statistics, right, they spend I don't know how much maintaining a bunch of people who are just looking to maintain this weight list over the prices to do this weight average correctly for the CPI. But let's say you solve all of that magically, right? I don't know how the fuck you do weights automatically without humans intervening,
right?
But let's say you do that. Then you have a price reference. So I guess you could just write up something that uses that price reference, and then like on the other side you have the order book of like how much is being asked, and you're just trying to minimize the difference between the two automatically, which is probably not that much code.
Well, and because you are the cryptocurrency centralized, like all of the purchases go through that blockchain, what the transactions are, which presumably you could have them be listed.
Yes, on a ledger. And then you need to like choose a consensus protocol, and like I know I hate anything that's like proof of work based, but like proof of stake, I imagine has its other problems that I haven't delved into because
Right.
like who knows? Like proof of stake, one of the instant initial problems is that it's deflationary by design, because if you hold the coin and if it's proof of stake, then you're incentivized to stake it instead of like using it,
Mm-hmm.
which means that people are incentivized to hoard it rather than actually put it out. And the point of a currency is not to hold it; it's to spend it, right?
Yes.
So either spend it or invest it, or use it to denominate loans, or it's to do stuff with it, right? The currency by itself is boring.
Right.
So like this is kind of a core flaw, I imagine, but maybe someone smarter than me can come up with like an overall design of something that takes into account everything everywhere. That would be something I'd be a fan of.
Yep.
I haven't seen it yet.
Roger. All right. Roger that. Okay. Let me talk. Let me broach one more subject, and then maybe we'll circle back around and just get other thoughts that you may have on this. But one thing I wanted to ask about is from an economics perspective, because obviously other people have talked about this, but not necessarily from an economics perspective. From an economics perspective, is there anything important, good or bad, to be said about the decentralization aspects of cryptocurrencies? So the fact that they are designed to run relatively peer-to-peer, and I have my own concerns about some of those things from an engineering standpoint, but
Yeah.
let's suppose that they are able to maintain a relatively diffuse network where lots of things in lots of countries are actually running lots of nodes. Is there anything important about that one way or the other, good or bad?
I don't think like if you're purely just like an apolitical, atheoretical economist, I don't think you particularly care.
Okay.
Like the important part is that like if you have a currency and market actors can make their own decisions, then the price is going to come up by itself out of it.
Okay.
And you already have this decentralization in that way, right?
Yep.
That people are not hampered to make economic decisions, in the market itself. Right? And having an order book that's just like open to the public is already enough for that, whether it's on like a normal clearinghouse and like a financial exchange, sorry, or like a DeFi exchange or whatnot. Now, what like DeFi opens you up to is basically like avoiding all regulation and sanctions and like money laundering laws from governments.
Mm-hmm.
But that's not really an economic problem as much as like a legal or a political problem.
Right.
Like what you think about money laundering.
Right. So in a sense, those they don't really have economic effects other than the effect of not allowing governments to set policies about what is and isn't legitimate economic activity, basically.
Exactly. Yeah. So we can't really regulate it.
Yeah.
So this is the only part of it. But like regulation is sometimes good and sometimes bad, right? People like to think that like all regulation is bad, or regulation is just always good and we should always have more. But like, you should just kind of like look at any regulation question in and of itself as a thing, right? People say like, if you look at the last Nobel Prize, that's a good example. That's like taught in, to most people. It's like, oh, minimum wage is always bad because it sets like a price floor, and this means that the market clearing price can't happen. But like, if you look at the actual market, there's a monopsony of like people employing towards the, employees.
Mm-hmm.
So the bargaining power is not actually equal.
Right.
So setting a minimum wage kind of like avoids this lopsided bargaining power up to a point.
Right.
And this up to a point is actually really hard to measure. We don't know where it is.
Right.
But presumably, like in the US, in this or that place, it can go up.
Right.
Or stuff like that, right?
Yes.
So regulation is always like a particular specific question, rather than like a general like blue sky question.
So you happen to touch on something that I don't feel like I heard many good explorations of, actually. So I'll throw it out there for you.
Yeah.
Because I'm actually I spend a lot of time thinking about legal issues, which I don't feel like many cryptocurrency people actually do. Not, I mean, I
try to avoid them. Really, that's the point of crypto.
But yeah, just to put the cards out there, from my perspective, the legal systems are not things that people did for no reason. we have
Yeah.
legal systems. They were major innovations in how societies structured themselves, and as bad as they may appear, I don't think people quite understand how bad things were before they existed.
Yeah, a book you
Um,
should read for that is Why Nations Fail by Darren Asimoglu.
uh, I'll put that in the link below. But what I was going to say is just talking about something you just said, which is a kind of a window into something I would like to get into if you're interested,
Sure.
is the idea of having a single currency that everyone accesses to do things. To me,
Yeah.
actually sounds very bad. And the reason it sounds bad is because local decision making and local legal structure being different and being able to change asynchronously seems actually very critical, as does being able to have currencies change and be changed in local bubbles in
Yeah.
ways. And so,
But
could you talk a little bit about that if you have opinions on it? I'd like to hear your
you
opinions.
underestimate the friction costs of maintaining multiple currencies by a lot, right?
Okay.
For the same reason that like the Eurozone, they all switched onto one currency,
Yes.
even though like Germany is very legally and culturally different from France, right? It's a good thing that they're both on the euro to some extent. But like if you look at like for instance Greece, had a financial crisis independently of Germany and
Yes.
France,
Yes.
right? And it would have been good for Greece at that time to be managing their own currency, assuming that their political system was like stable and everything, because then they could have like managed a crisis without like an austerity dictum, right? They could print money and kind of use that to artificially stimulate themselves, to kind of dampen the crisis. So in that sense, it would have been good to have your own currency as a smaller actor as part of a bigger market, right? But the friction costs are actually really, really high to have different currencies in different places, right? So if New Jersey had New Jersey coin and Pennsylvania had Pennsylvania coin, like market frictions would be, I think you're underestimating the friction costs of like trading between those two things.
Okay, so what you're suggesting is that your read of the Greece EU, because that was exactly the kind of thing I was thinking about.
Okay.
Right. Your read on the Greece versus EU side of things is that, yes, that is a problem that does
Yes.
occur, but that problem is a better problem to have than the general problem of each EU nation has its own currency.
For EU, I would say like yes and no. It really depends everywhere, and it depends on a bunch of factors that are hard to like be economical and like theoretical about, like political stability, right? Do you really trust like the Greek political system to manage their money, especially in a financial crisis? It's like a hard question, right? Because let's be honest, Greek is not that politically stable at times
Okay.
and stuff like that. I would say it's above my pay grades to
Okay.
like kind of opine on that
Okay.
one.
Fair enough.
But I would say there's you can make arguments on both sides.
Okay.
And I'm not knowledgeable enough to tell you like, oh yeah, Greece really should have had their own currency back when they had that crisis there, or they really shouldn't have. I can tell you like, hey, having your own currency, if everything was managed this way, would have been really good. But then also I would have to find a way to quantify like how much friction does having the drachma versus the euro versus being on the Eurozone imparts, stuff like that.
Gotcha. Well, that's good though. So to summarize your opinion on that is, it's like, well, it's not something you would generally think about that much with respect to crypto, because it sounds like we don't know that there's a clear answer necessarily. Like, it's not a glaringly obvious economic answer that you just want lots of currencies or something.
Yeah, no,
Yeah.
no, not at all. Like
Okay.
I'm very much from the data school of economics, right? Like I'm an econometrician by training,
Yes.
which is like basically a statistician,
Yeah. Yeah.
glorified. So I'm very much from like the look at the world and measure stuff and come up with a theory from that rather than the other way around. So
Okay, so I think that was basically it from the stuff that I mean, I may have missed something because I tried to write down all the things I wanted to ask about. Based on what you said already, is there any other topics in crypto that you'd like to get into now that we haven't talked about so far?
I mean, everything's a bubble. Tether is like a horrible fraud. DeFi at this point in time in 2021 is absolutely useless except to leverage the ecosystem. Like this sort of stuff, like everything's crazy right now. We can talk about that, or we can cut it short. That's up to you.
Uh,
Like,
well, I guess so. The problem for me is I don't really care about that. Like, so
yeah,
the degree to
that's fine.
which people out there are scamming on crypto or all that sort of things is not that interesting to me, really, just because I don't think that speaks one way or the other to the technological underpinnings. Like to
Yeah,
me, the more interesting question is there some interesting technological thing here to explore, or isn't there? And if there's a crap ton of scammers doing scams, that may affect, like, maybe that ruins the technology for everybody because no one will trust it, so it doesn't matter. And that's a bad outcome, certainly, if there was some good technology to deploy. But from an engineering perspective, that was a social thing. I'm not, that's not my job. I don't care. So
well,
from
is
my
it though?
perspective,
Because
I want to know more about the
I think like the
technical part.
social thing, the social thing you're referring to is built into the incentive system that you're building into the crypto,
Okay,
right?
well, go ahead. Yeah, then just
Um,
why don't you go on that for a bit, just
so,
so I
like,
can.
if you're building, for instance, a deflationary currency, you're building the speculation right into it, right from the start.
Okay.
So, whenever you're thinking about like all of these things from a computer programming point of view, you also need to think about it from like a mechanism design and game theory point of view of like I'm setting up this incentive system, and humans being quote unquote rational actors, at least you can trust humans to try to make the most money out of any system that you build,
Mm-hmm.
right?
Mm-hmm.
They're going to be at least rational for making dollars and running away with them.
Mm-hmm.
um, then that's at least a thing that you can expect from the technological point of view, right? So like Tether is probably completely uninteresting to you on that front,
Mm-hmm.
but like the fact that like I don't think we've come up with a consensus mechanism that is not deflationary, and deflationary consensus mechanism like proof of stake or proof of work, which is deflationary, I guess, through just like the negative sum ecosystem that
Yep.
builds up as you build it.
Okay.
Um, like it's always going to have these problems and built at like the very foundational level of like how people interact with it on a financial level, right?
Mm-hmm.
So even if we did like solve all of like the things that I said would be nice, you still have that as the core thing, so you're probably still missing like an innovation on that level, right? But it's hard because how can you have a decentralized system where you're trying to you place zero trust into anyone, right? And there's this great essay by Bruce Schneier, who's a computer security
Yes.
expert, you might know.
Yeah.
And he talks about like cryptocurrencies being awful because they place zero trust in humans, right?
Mm-hmm.
And placing that zero trust has an enormous cost that can never be overcome, he argues. And at this point in time, I'm kind of like incentivized to believe him because like the best alternative we ever came up with the proof of work is proof of stake,
Mm-hmm.
right? And or like when I say proof of work, I include all of like the various stupid flavors like Chia or like Filecoin or like garbage like that, right? It's all like waste some stuff in the real world to burn and to make money on this side of the equation. And proof of stake is stake those coins to make money from the coin itself, from the new transactions of the coin. But like proof of stake is still like inherently you're incentivizing people to just kind of hoard it and not use it. And you have to incentivize people to do stuff like this if you don't trust people at the first layer.
I see.
Do you see what I mean?
I do.
Right? Because like the very foundational thing of Bitcoin is I don't trust anyone at all, right? You could all be screen names on my laptop for all I care, because the incentive system is just going to guarantee, this thing works. But because that's like the first layer that you start from, then you're forced to do something like proof of stake or proof of work because you just don't trust people to do anything, right?
Yes. Yes.
And like from there, any other step you take from that first step is necessarily in that direction. And I mean, we haven't seen, good proof of stake coins at this point. People are going to point to garbage like Cardano, and it's like, no, this is just like a financial play toy still. Like it doesn't do anything. So I don't know, like, and also we're in a financial bubble. So like, who can really know like what behavior is to be expected out of these things either, right? We don't have any like clear measurement at this point in time in 2021 of anything. But like, if we're thinking about the actual design of the thing, like, I don't think that it can work right now with the consensus mechanisms we have.
So let me have you expand on that a little bit, and I will. I didn't know actually that Bruce Schneier had written something about this. I would have read it beforehand, but I'll check it out. Obviously, I know who he is. I'm familiar with two fish and three fish and so on. So or two fish. That's good. Blowfish and two fish,
Yeah.
and Skein. I don't know if they did. They ever have a three fish? I can't remember. I think I may have just made that one up in my head.
You would know
Um,
way more than I do on that topic.
Anyway, yeah, Skein was the one I was actually thinking of when I said three fish in my head. So ignore that for
Yeah.
now. Anyway, they may have called the underlying thing to that three fish. I don't remember. I haven't touched that stuff in so long. It doesn't matter.
What's the?
Um,
This is like encryption algorithms, right?
yeah, yeah. So, well, Skein is a hash function. It was
Yeah.
submitted to for the NIST. Yeah, so you know the Ketchak sponge. Any
Sorry, can you say that slower?
Sure. So I want to say Ethereum even uses it. It's Keccak, I think. It's pronounced Ketchak, I believe.
Okay.
And basically the hash function that's used in Ethereum, I think, is actually a Ketchak sponge hash function. They're basically, the National Institutes for Standards or whatever it's called, the NIST, the NIST standards, where they have cryptocurrency, that's good. Where they have cryptography standards. They had a cryptography standard recently where people submitted hash functions. So modern hash functions, and
That are like the most secure, like the fastest, or what?
well, I mean, one of the problems. This is getting totally off topic, but one of the
Yeah.
problems. One of the problems with cryptography is there's no such thing. So we don't have a way of judging the security of a cryptographic function. So when we look at something like a hash function, currently all we know is when we publish them. When they publish them, it's how many rounds of that function running one after the other can somebody break? So can another cryptographer break? We
Right.
don't actually really have a way to quantify beyond that. Like, we don't have ways of saying we think this is this much more secure than this other thing, because all we know is nobody broke either of them. So if you look
Right.
at something like the Ketchak sponge and Blake hash functions or something, I don't know that anyone could really tell you what's the most secure. We only know secure or not, and not means someone broke it. Secure means someone hasn't. So,
Mhm.
so in this case, yeah, like the Skein was a hash function that Bruce Schneier and I think someone from Microsoft, I don't remember who the authors were, submitted for that NIST hash function challenge. The Ketchak sponge, the one that's actually won it. And it's now currently the choice for NIST's like hash function. So SHA, right? The standard hash thing. So SHA-3, I believe it would be, is Ketchak sponge. It was the winner of that, so it now becomes certified as, and it's got a certain, like, here's the round constants, here's the level of bit. I don't know why I'm saying all this. I don't even do cryptography for a living. I'm just saying that's what. So anyway, let me get back to what I was saying. So Bruce Schneier, I didn't know he had written about that. Obviously, I know who he is. I'm interested to hear what he wrote, because what you said was interesting. I hadn't heard someone say that before, so I'd like to see what he said. But can you go into a little bit more detail, since I haven't had the benefit of reading it yet, while I still have you here? Can you talk a little bit more about that idea? Because that was an interesting idea. That
He
not
would
having
know-
trust in the system
Yeah.
at the lower level propagates forward. Can you just go into a little more detail on that?
So I read that essay like a couple of years ago, to be honest with you, and I do have like more of a background than is reasonable in game theory and mechanism design.
Okay, yeah.
So I just think about it like mechanism design is like the formal mathematical field of study of like incentive design. So for instance, like I think it's last year or the year before, like Paul Milgram won the Nobel in economics for that, and he's like famous in design and auctions, right? Like he designs the Spectrum auction in the US for like how do we auction off, bands, to different people in a way that is the best for society, stuff like that, right? Or like Google have like their AdWords auction, which is pretty complex and stuff like that. So mechanism design is like this field. So I was thinking about it in that sense that like, you need a way to incentivize people to put in some resource to confirm the transactions But if they have to put in resources, they either have to be external or internal, and external basically ends up being proof of work either way you look at it,
Mm-hmm.
and internal ends up being proof of stake, I guess.
Okay. Yep. Yep.
So I mean, I haven't seen a way out of that, but maybe someone smarter than me can come up to it. Like I said, I don't have a philosophical problem with all of this.
Right.
I
Right.
have
Right.
like a
Yeah.
design problem, right?
Yeah.
I don't think I can tell you anything that would make you go aha apart from that, because like that essay is not exactly fresh in my mind either. And like I
Okay.
think Bruce wrote a book about trust that I should read. It's somewhere on my reading list.
Okay.
So he knows more than me, and go read that, I guess. Don't listen to me.
Okay. Yeah. No, that's fair. I will definitely check out that essay because I'd be interested to read it, obviously.
Yeah.
So okay. But I guess there was one point you were making there, so I want to make sure that I have that point well understood, because when you were bringing up that essay by Bruce Schneier, the point that you were making was that you think that the social outcomes of there being a lot of scamming and stuff, which hopefully
Yeah.
I don't think anyone could disagree that there isn't a lot of scamming. If someone literally out there actually doesn't think there's a lot of scamming going on in cryptocurrency,
Please stop managing your own money.
they're not paying attention, but that's
Yeah.
that's just true. It's separate from saying that all cryptocurrency is a scam. That's a different statement. But just looking at objectively, we know there's plenty of scamming going on. But to me, I was drawing a hard line, and you were saying yeah,
is a good enabler of stuff like pump and dump scams or like other stuff like that, because like you have an open order book, right? For the same reason that normally like the SEC, they're looking at you if you're trying to list a public company, right? Because they don't want you to open up your order book to the public to just scam them, right?
Right.
Because like pump and dumps are really classic, right? Scamming is like the default behavior of humans, unless we put like, stop limits and you threaten to put people in jail if they do it.
Mm-hmm.
Because like a pump and dump is really simple. It's like, you create a thing and then you convince people that it's great. And then while they're buying it because they're excited about it, you sell into their buy orders, right? In the public order book. And then when eventually you're done selling into their buy orders or the hype stops, everyone is here. And then they realize like, okay, I'm done being excited. And then there's no one to sell to, so it crashes.
Right. Yeah.
So, like this is a very natural scam to happen. And crypto enables that beautifully by having like a very open order book. So,
well, can you be more specific about that? Like, so explain the concept of an open order book in this case and why it's different from why you think that crypto specifically has the properties of being good for scams.
It skirts regulation. I think the SEC and the CFTC are interested in it by now because they saw how horrible the scamming problem is.
Okay.
But like historically up to now, and maybe this was because of like the previous US administration or like, everyone else is asleep at the switch in Canada and the EU or something. But, you can just go on a crypto exchange the same way that you can go on an online poker table back in the good old days, and you can just do stuff with money.
Right. Yeah.
And like, there's not much stopping you except like the half an hour it takes to onboard, right? And by that point, all you need, is just a good way to scam people and to convince them to onboard and put money there and then do exactly what you want, and you're done scamming, right? Because like their order is against your order on Binance or whatever exchange, the same way that it would be at an online poker table, right?
Yeah.
If I'm the sell order and you're the buy order, we're meeting each other, right? So if I convince you like this thing is great on Twitter, and then I'm like, yeah, man, you just have to go on Binance, put in $500 and go buy, whatever new dog coin that I'm shilling you.
Yes.
Then you're actually buying the thing I am selling.
Yes.
But I'm obscured by like the exchange and like all the other things. And I'm also sheltered from regulations. So I can't get sued by the SEC currently. Or maybe actually they will in the future, but like up until now, everyone thought that they wouldn't be. So that's just a regulatory problem.
Why is the word open order book used to describe that?
Well, because like you're putting a buy order, right? And I'm putting a sell order, right? And like theoretically, it's a nice clean market, right? Where there's a bunch of people like Bitcoin. If you're putting an order and I'm putting an order, your order is probably not meeting mine, right? Unless we're exceedingly lucky, because there's a bunch of people trading on both sides. But if you're buying some random shitcoin, then like the market is thin enough and illiquid enough that we're probably going to meet right there, right? So I'm actually scamming you directly.
again, the why is open order book a term? Like I just
I
trying to
don't
get
think
that
it's fair, right?
terminology correct
Like,
there.
yeah, like the order book is just like the actual order book, like on the
Yeah,
exchange, like where it's like a a broker like
yeah.
normally. Um, I said open order book. I don't think that's a term of art, right? I just came
Okay.
to it to say that like you're not impeded to actually get to it, right? You don't need to be like an accredited investor
Okay.
or
Okay.
anything.
So when we say open order book in this case, what you're trying to say is that it's anyone can come in, right? It's like it's literally we have no
It's a
rules
public
about
market.
who does this, and so
Yeah.
the book is open from the standpoint of like any random person who walks in off the street can do whatever they want on it.
Yeah, you can go
Okay.
to Robinhood and buy Apple stock, right? No
Yeah.
one's stopping you
Yeah.
because it's a public market,
Yeah.
right?
Yeah.
Whereas you can't go to, wherever and buy, for instance, Theranos stock back when it was a thing,
Right.
because you needed, well, either connections at like an investment bank or to be an accredited investor to actually like invest in the thing directly, because there's actual rules that stop you from just buying stock in private companies directly because there are so many scams.
Didn't help for
So
Theranos though.
well, it was a bunch of like old senators, so I'm not really sad they lost money.
No, I don't think anyone is.
Yeah. Like I'm not sad Henry Kissinger of all people lost a couple
Yeah,
$1,000,000 to like
I'm sure everyone is weeping over Henry Kissinger's lost profits on Theranos.
yeah.
Uh,
So but
yeah,
I mean, but for exactly that reason, right? No one's crying that Henry Kissinger lost money to that scammer eHomes. But like if this single mom got convinced by that asshole,
right,
then that would be a story, right?
right.
Because she needs to pay rent,
Yes,
and people are actually sad about that.
yes,
And she can't know better because she's not supposed to be sophisticated
right,
in like finance,
right,
and which is why like public markets are supposed to be regulated, right? You're not supposed to be like some random piece of shit public company. You're
right.
supposed to like publish audited financials every year and stuff like that, have quarterly results and blah blah blah, and like at least the SEC can go like, hey, look, they publish like, and then PwC or KPMG or something, the auditors are in deep shit if they're lying about the numbers.
Right.
So like everything's supposed to be on the up and up there.
Okay, I get that then. It was confusing me a little bit because I wasn't sure which
Yeah.
part of that you were talking about. That makes sense. So I guess the part that I'm still a little hazy on. So let me just ask a little bit more clarifying, just so I make sure I've got it.
Yep.
The part about the trust, though. So is
Yeah.
is what you were trying to say that the fact that the idea of cryptocurrency is that it is anonymized, trustless exchange. Are you basically trying to say that
I think
that
if it was
is
not anonymized, there would be something to it. Like a big problem with DeFi, for instance, DeFi loans are always over collateralized or on some insane ticking time bomb mechanism, right?
Mm-hmm.
Over collateralized in the sense that like, okay, you're gonna loan me $1,000 and I'm gonna lock up in a vault, $1,300 in Bitcoin,
Mm-hmm.
right? For you to, take if I run away with it because there's no trust in the system, right?
Uh-huh.
Or it's a ticking time bomb like Iron Finance, which was under collateralized, and then it's just like,
Right,
we're waiting until the day where it explodes.
Right.
But if you look at normal finance, because it's not anonymous, right? Why can I go to the bank and take a loan? Because they know that they can knock at my door if there's a problem, right? So, yeah, if you do break that part, like the actual anonymity, well, I don't think the Bitcoin people are very interested in it anymore. But like a lot of the problems get solved right away because like trust comes into it, because reputation comes into it and stuff like that, right?
But at that point, and this is usually my point, and one of the things that will be pressing more later. My point is just if we started to trust who was using the system, then we don't really need any of these other elements of it anymore, is the point.
Yeah,
right?
An SQL database is going to do way better than all of this.
Exactly.
Yeah, obviously. And then, so if you don't trust anyone, and then by like definition, and you want a decentralized system, then you have to assume it's under attack at all points, right?
Yes.
Because you need the consensus mechanism and everything. So it's like, how do we all agree that like this transaction actually happened, or like that it's not just like a scam or not, right?
Yeah.
So you need to design a way around that to make sure that, under the assumption that everyone hates you and is adversarial, like it's still gonna work.
Yeah.
And like the only way we found is like those deflationary things, which I'm not, I don't believe in.
Well, we also know mathematically that there actually is no solution to this problem. You still have
Which
to
one?
have at least 51% of the participants not hate you. So if 51%
Yeah.
if 51% of the participants do hate you, that's it. So it's not
Yeah.
like it really solves that problem anyway. Although maybe there's a error in that mathematical thinking somehow. But at least as far as we currently know, there's really not a perfect solution. But our
Yeah.
argument, I guess, for cryptocurrency would be that it's 51% is a lot of percent.
And sociologically, I mean, like when you saw like Ethereum, like it was hacked when they made like the DAO thing, and
Yeah.
like their immediate thing was, hey, roll it back by force,
Right. Yes.
which is like, to me, if you're gonna stand into all of this, it's more like, yeah, hey, code is law. Like you got hacked,
Yeah.
and that's the live and learn.
Yeah.
Because it all kind of erodes immediately at this point. It's like, Ethereum itself is like proof of, my friend says it's proof of friendship with Vitalik Buterin. As long as you're a friend with him, you're safe
Yeah.
from whatever's gonna happen. Right?
I like that. That's good. Okay. That's how I look at it too, actually. Believe it. Yeah. Oh, because I haven't really heard good answers to those questions. Which again, like
I don't think they have any at this point. And I don't know if like, there's a bunch of like mathematical problems out there where we don't know if there's a solution, but like we think there probably isn't one.
Right.
And like I'm probably 70% that there is no mechanism design that would satisfy the conditions I want.
Okay.
Right.
Yeah.
At all, ever. But I'm not like philosophically opposed to it.
Right. Well, I think that's all I had for questions. Like I said, I don't really care too much about the scamming other than the technological aspect, which I think we kind of covered, which is like, that was good to get out there. It's like, okay, so there's certain aspects of the system that one might argue produce the scamming, and that's important to think about. Is there anything else that you wanted to talk about before we...
No, I mean, like, let me look. Yeah, the energy use of proof of work is horrible. I ballparked it, and I think about a fifth of all GPUs in 2020 went to Ethereum mining, which disgusts me.
Wow.
And about 4% of TSMC's fab time went to Bitmain for Bitcoin.
Ouch.
Which is also disgusting.
Yeah, that's really bad.
That's the 5 nanometer node. That's not even like the older stuff.
Wait, what?
Yeah.
The 5 nanometer node, the one that's not even online yet, I thought.
Yeah, Apple's on it.
Okay.
Yeah. And Bitmain is the other one on it, because if you can turn silicon into money, obviously you're always going to be the one that's the most willing to pay, right?
Yeah. Wow. Okay.
The straight money.
All right.
Yeah, so you can ballpark it by like I'll publish a blog post there. So I'm just like kind of like overall disgusted by like the actual, and then the energy use is like anywhere between 0.5% and 2% of all of the energy that humans use, period.
Right. Yeah. Right.
Which all of this to sustain basically a Ponzi scheme at this point, right, in 2021. Like this is a big musical chairs game. So this is like fairly disgusting to me. Overall, which is why I was saying like I wouldn't care if it was proof of stake, because if you're all like playing these financial games with each other but just with your dollars, fine by me. But if you're using up TSMC fab time and you're making like deep learning and gaming impossible, and
yeah,
you're also like burning the equivalent of like whatever like an Argentina's worth of electricity every year, like I'm actually disgusted. Like
fair enough. Fair enough.
Yeah. And then the other point is people like they always talk about DeFi, but for the same trust reason, like loans only work if like your reputation's on the line for loans. I really think like you need a way to know the reputation of the person you're loaning money to,
yes,
for a loan to make any sense,
right?
So DeFi can't work until then. Like at this point people say DeFi this, DeFi that, but basically like all it resolves to is a way to leverage, because like you take Bitcoin, you lock it up, so you keep the price exposure to Bitcoin, but you get the loan out of it, which you can use to buy more Bitcoin.
Right.
So you leverage yourself.
I see.
And that's all that DeFi is used for currently. So I mean, like, I'd be open for programmable money to do cool things, but I don't see them.
Well, I think that's pretty much it for
Yep.
for stuff for
Thanks.
me. I mean, I can't like uh this is the first time we've really talked about economics, so I don't have any comebacks for you either. In other words, like, maybe in the future, if I
That's
talk
fine.
to an economist who is in favor of cryptocurrency for some reason, I could say, oh, here's some things that were
Well,
said. Do you want to
there's
respond? But
like
I don't have
there's
any
a
yet, so.
specific list of like four of them, and they're always the same four ones,
Okay.
right?
Well, I'd like to
You
talk to
know,
them. I'd like to talk to them, right?
it's
I want to hear what they have to say. So,
it's like 9 out of 10 dentists say you should brush your teeth,
uh,
but maybe we should also ask the 10th dentist what he
yes,
thinks.
yes.
Like,
Well, I do, because one of the things that I don't think or that's underappreciated is it is actually true that in general you will have a large amount of groupthink in an industry. In my industry, for example, I could see 80% of people telling you to program object oriented, which I think is a
oh
terrible
yeah, no,
idea, right?
same as you there,
Yeah.
because yeah, I write good code. Yeah, no,
So,
that's not. Yeah,
that's so, if 8 out of 10 economists or something told me that Bitcoin was bad, I don't, maybe they're right, or maybe they're
yeah.
people who think object oriented
But
programming
the
is
thing
cool.
about object-oriented programming, and like I'm friends with Dan Lemire, who you might know.
I have I saw him on Twitter. Someone, when I was doing the ref term stuff,
He's
someone
like
mentioned him. Yeah.
a university professor, but
Yes.
he's also like a computer performance expert.
Yes. Yes. Right.
And he's also much more experienced in the programming world than I am.
Mm.
And one thing he told me at some point that I found like pretty insightful was that the field of study of software engineering failed,
Yeah.
whereas computer science didn't, because software engineering for stuff like object oriented design, like your question is fundamentally like can we measure where that's better than, like, let's say imperative or like
Right.
functional
Yeah.
or declarative or blah blah
Right.
blah, right? And we never found a way to measure anything there.
Right.
So
Right.
like it all ends up being just like religions.
Yes.
So
Yeah.
um so he was saying basically like we failed at software engineering because we never even I'm putting words into his mouth, and like he might be mad at me for saying that, but like we never put a way to like even measure productivity in general.
Yes.
So we like software engineering as a field of study like is basically done now, because we can't measure the most basic thing that we're looking for, which is like how productive are you as a software engineer or as a whatever coding person. And so like anything that comes from that is just nonsense because you're pulling numbers out of thin air, right?
Yeah. I mean, but yeah, I agree. But this is why I say you would not find that to be the majority opinion, even though
No.
that is fairly obvious on its face to someone like me. So that's why
Yeah.
I do want to hear from multiple people, because it could
Yeah, fair
be
enough.
that the few economists who think cryptocurrency is good are right. You
There's a
never know,
difference in
right?
like there's a difference in like the actual like how would a philosopher say it? Like epistemic argument or something, like object oriented people, like if they come to you and you design this thing and it's designed in a sane way, not like a bunch of objects blah blah blah, like all broken down super like quote unquote solid and nonsense, like their arguments are not going to be something that holds up to scrutiny. It's going to be like, but what if you have to change it? And you're like, but I was trying to solve this problem and I solved it,
Mm-hmm.
right? I'm done. Like, why are you like, this is not something that's like measurable or arguable, right? Versus if you have something that on the other side you have an argument and the person says, okay, but it doesn't hold up the data, right? Then regardless of the person being the minority or the majority, like the argument itself holds, right? So like this is one thing about like object oriented people are the majority, but their arguments themselves don't hold because they're not based on anything.
Well,
Like,
but I would argue that economics has a lot of issues, in my
yeah,
opinion.
sure.
And
And well, yeah, measurement issues are like abound,
yeah,
but also like you're not in the profession, so like I don't think the signals or like what you read about it, like they're filtered through at least two levels from like the actual observation normally, right? You're gonna have like a journal article which is gonna come into like whatever, like a conference talk, and then it's either gonna be like a pop article and then like a Twitter person yelling about it, right? But like if you go to like NBER and you just read stuff there, or like the American Economics Review or something, you'd find it to be like extremely scientific.
Uh, okay, so disagree. So this is not really here nor there, but when I look at
Yeah.
economics papers, usually what I see is that their modeling techniques are incredibly primitive, even in today's landscape. If I looked at a typical game simulation in a video game,
Oh yeah.
it is light years ahead of the simulations that people have built in economics, which is, to me, a sign
Yeah.
that they
So
don't really know what
there's
they're doing, right?
no so you're wrong on a level there, because if you're fitting a model, like you're making a model of the world, right?
Mm-hmm.
And then you say like, okay, this is my model, right? And it's arbitrarily simple or complex, right? For instance, like GDP, like the simplest model is consumption, investment, net exports,
Mm-hmm.
blah blah blah,
Mm-hmm.
right? And this is a very very simple model. Or you can have an extremely complex model, but the problem is like the more complex your model is, the more free parameters you have,
Mm-hmm.
right? And eventually, the problem with economics is that you can't really run like experiments, right? We try to do like natural experiments where we look for like jump points and measure between them,
Mm-hmm.
but like you're constrained to having very 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 few free parameters in your model because of the data that's out there, right? You can't really experiment with it, and you don't have the counterfactual history of the world where like
Yeah.
something happened differently. So you can write up easily, like, and you can find 100 equation macroeconomics models, right? But they're not much more predictive than like 2 equation macroeconomics models, and they're also like extremely brittle because now you have like 72 free parameters that are being fit to the data versus 2, right?
But that's not what
So
I'm saying, right? I'm not suggesting that they should be able to do something better. I'm saying that it seems pretty obvious that it is not good. Because if you wanted to actually be able to answer hard questions about the real world, it seems
yeah.
overwhelmingly obvious to me that the equations that they are using are insufficient. That they could not do better is not the same as saying that they are doing good.
No, so like the reason, like we're not lacking in that, in like I'm saying in the profession as though I was an economist, right? I'm a data scientist with a background, but like, and so I'm not actually doing this, but we're not lacking in like willpower, manpower, smarts, or like math. There's a bunch of like really smart physicists who end up doing economics. We're not lacking in like smart models. The problem is, like, if you come up to other people with your model and you have an extremely complex model and you say, look, it fits to the data, I'm going to tell you, well, yeah, but you fit like 50 free parameters to the data. How about like this other model with like 50 different free parameters, right? Whereas if I have a simpler model with 2 free parameters and I tell you, hey, look, this and this is the data, then it's pretty easy to convince people that this is capturing some sort of simple reality about the world where you can understand it, right? So the fewest free parameters you have coming into modeling the real world, whether they're like constants you're building out to the equations or stuff that you actually have to freely fit to the data, the better the model is. So if you're building like a very complex agent-based model from the ground up of like household behavior and consumer behavior in a central bank and blah blah blah, and by the way, for your fun, the New York Fed, their actual model of the economy is open source in Julia on GitHub. You
Yeah.
can look at it. They're really, I'm a big fan of them. Like I actually contributed to like side projects of them, but they're really cool. Like the New York Fed, their model is open source. You can go look at it. It's not that simple. It's hard to fit and everything, but it's also not like as complex as it could be, right? It's like a 60-page paper to read through to get it, but their model like arguably is maybe a bit too complex even, right? You want as few free parameters as you come up, and if you make like a model of like household behavior, then it's like, okay, I'm going to maximize utility over my life, so I need to balance like the loans I take versus like the job I do and how much education I want to maximize how happy I'm going to be over my life, blah blah blah. Like, okay, I already have like 9 or 12 free parameters right there, and it's like, okay, business behavior, how do you do business loans versus like investment spending, extraction, how does a dying business act versus like a growing business, blah blah blah, model over there, right? And then you have the government over here, right? And then you need the interaction between all of them, and it's very easy to spin out of control into an extremely complex model very fast, and that model is to me extremely unconvincing, even though like to you like all the decisions made along like those 1,200 lines of code or like 12,000 lines of code are very like logical. I can argue about 11 of those 12,000 lines, and we're not happy. Whereas if my model is GDP is consumption plus investment plus net exports, we're like, okay, here's the baseline, right? We can kind of like agree on this one.
I mean, again, like this has nothing to do with cryptocurrency, so it's probably not
Yeah.
worth going into. But again, who cares? Like, so those are all arguments about how to make economists' lives easier. But it's not a good statement about having actually figured out how to do things well. And the reason that I say that is because it seems like fairly fundamental questions are still very difficult for economists to
Yeah.
answer. And the reason for that, I would argue, is because their modeling is at a level that just isn't sufficient. Now, if it's too hard to make models that are more advanced, that's fine. That's not the same as saying that they're good or bad. For example,
No, it's really
take your
a
minimum
data
wage
problem.
example from before.
Yeah.
That should
Yeah.
be a trivial question for economists to answer, but they can't.
Yeah, because it's a data problem. We don't have like the minimum wage thing, like ideally would just be like a curve fit, right? In the sense that like minimum wage being zero means
Well,
that
no,
like
no. I mean, no, that's not true, right?
let's
Like,
say
that's assuming the answer. So you don't know that because economists have never actually done the work of figuring out if the other thing is possible. It's a
let me
much
be
harder thing, right?
let me be the dictator of the USA and I'll answer you the question in 2 years. Okay. I take Ohio. The minimum wage over there is $47. Florida, the minimum wage is like zero.
Yeah.
Minimum wage is negative in Nevada because I said so.
Yeah.
Minimum wage is $25 in New York because I said so.
Yeah.
I'll tell you, we have the answer pretty fast. Like if you have,
But then we wouldn't need economists, right? The point of economics is to build a model of the real world's economy so that you can answer the question about what will happen without doing it. And to the extent that you can't do that, it's not like that's a good thing. It means that the model is not very good. That's all I'm trying to say.
We're at the margin, in the sense that like I can't tell you the minimum wage should be $14 or $17, but I can tell you if it's 9, it should go up.
Yeah,
and that's already a good job, I would say, because like we're lacking. We're not allowed to just say that Ohio is now my test grounds, and I can whatever.
You could try. Like, we'll see what Ohio thinks. Maybe you sell it right. Yeah. Be like, listen, Ohio, you're all switching to Bitcoin, and we're setting the minimum wage.
Exactly. I mean, let me, and I'll solve a bunch of things. Trust me. But yeah, it is a data problem, and for most questions in economics, you can think only at the margin, in the sense that like we're here. And you can only think of like, the gradient, in the sense that like it should go up and it should go up by a lot, or it should go up by a little, or it should go down by a lot or a little.
Yeah.
But you can't really tell you like the point estimate.
Right.
Because you're always lacking data, right? By the time at which we would know what the perfect minimum wage is, we would have overshot it and wrecked unemployment already.
Yeah.
So, because obviously like if the minimum wage is like $40, like no one in Idaho has a job.
Right.
So
like, yes.
Obviously, but you're not gonna find out that the optimal minimum wage, and obviously like the optimal minimum wage in like San Francisco is different than in Idaho too, which is kind of dumb to be setting at a federal level. But besides the point, like
well, it's continuous as well. It's not it changes over time.
To answer your concern, it's not a modeling problem. It's always a data problem. Which is why like look at this year's Nobel. It's really fun to read into it because like they're solving questions with like pretty clever ways, right? That's like, what's the effect of immigration on wages? And it's like, okay, look at the, Muriel boat lift, from Scarface, where like 150,000 people came into Miami overnight. And then look at the wages of people in Miami before and after. And this is basically as close as you're going to get to like being a dictator and saying, okay, there's no frontier with Mexico anymore. Go.
Right.
Like, we have a microcosm of that. So if you can measure this, you have an idea, right? Similarly, they looked at minimum wage when like New Jersey moved it and Pennsylvania didn't. And there was a mall that was in both states at the same time. And they looked at what happened in the mall. And it's like, this is kind of the best we can do because it's not really a modeling problem. It's really easy to make really cool models. The problem is the data.
Yeah, let's just put it this way. Topic for a different time.
Yeah, for sure. For sure.
Anyway, so I think we have no other cryptocurrency topics to talk about, if I'm not mistaken.
No. Done.
So,
Yeah.
do you want to give people before signing off where they can find you on
Uh,
Twitter or and on Reddit, I guess as well?
yeah, I mean, go yell on Reddit as much as you want. You're just gonna on Reddit economics, you're gonna get your comments deleted because we tried to steer the discussion.
Okay.
The best forum on Reddit for serious economics discussion is our bad economics, but it's pretty tightly moderated because we try to keep a high signal to noise ratio. I have a personal blog where I yell about things that I don't like, singlelunch.com. The easy way to remember it, my wife came up with it. It's the kind of thing you'd read if you were eating lunch alone.
Okay.
Singlelunch.com.
I can put the links in the description as well if you send them to
And
me.
then on Twitter, I'm at VH Ranger, where I also, just poke fun at random things. So don't expect much, seriousness there either.
Fair
But
enough.
yeah, I'm probably best to find on Twitter on my blog. And if you're looking for more economics, bad economics is the best place on the internet, I would argue.
All right. Well, thank you very much for joining me, and I will put
Pleasure.
those links in the description below. If you could send me something, I'll follow up with you afterwards because you also mentioned a 1984 paper
Yep.
and some of those other things. So I'll try to collect those. I tried to write them down as we were going, so I can put those links in the description below so people can take a look at them. I guess the minimum wage paper too, just even though that's not really cryptocurrency related, it was mentioned a couple
I
times.
mean, go
Um,
like Google Nobel Prize 2021
oh,
David Carr.
there you
You're
go.
gonna find. Yeah.
But I'll put those links in the description below. Thanks so much for joining me. Had a
Pleasure.
lot of fun talking about this, and yeah, maybe we'll see you back on here again after I talk to some. If I can find an economist who's willing to talk to me, who's pro crypto, maybe I can get
I
sort of
mean,
what their
I can tell
opinions
you
are.
their names, right? There's, like I said, four of them, maybe.
Yeah,
So,
well, if you know any of them, if they, I don't know, probably not. But if I'd like to, like I said, I'd like to get more contacts, so that I can have the rest of the discussion. But thanks so much for joining me.
so, yep, pleasure.
Catch
Have
you.
a good night.